Clients with self-employment income. Our tax centers often assist clients who are self-employed with their tax preparation. Clients who are self-employed do not receive their income reported on a W-2, but rather may receive payment for work in the following ways: cash payments, payment by a personal check, or a payroll check from a company that will not be removing any taxes from the client's paycheck. Some self-employed clients will file their income taxes using the total of their cash or check payments received during the year. Others will receive a Form 1099 MISC or 1099 NEC. Beginning with tax year 2020, amounts paid to self-employed taxpayers will no longer be issued on the 1099 MISC. It will instead be issued on a 1099 NEC, which stands for non-employee compensation. Examples of self-employed individuals are gardeners or landscapers, freelance workers such as graphic designers, actors, and journalists, cab drivers and clients who drive rideshare companies such as Uber and Lyft, beauticians, painters, and carpenters. A general rule of thumb when determining if a client is self-employed is that if the income is earned and not reported on W-2, then the client is probably self-employed. Expenses. Self-employed clients are often required to purchase items in order to complete their work. These items purchased can be a business expense. Self-employed clients are able to use business expenses as a deduction on their tax return and should be ready with a list of these expenses. We use the self-employment expense worksheet to help guide us and the taxpayer in categorizing all qualified expenses that the client may have had during the year. Keep in mind that we can only deduct expenses that are specifically for the work that is considered to be self-employment. Here are examples of possible business expenses. A landscaper may have to purchase a rake or shovel in order to complete the job. The rake or shovel would be a business expense since the work could not be completed without these items. A housekeeper may purchase cleaning supplies such as a mop or liquid cleaners like bleach. These purchases are required to complete the job and can be deducted. So, keeping in mind that we can only deduct expenses that are specifically related to the self-employment work, let's go through a few more examples. If a client has employment as a chef and will receive a W-2, but is also a freelance beautician, the beautician work is self-employment. Expenses related to the beautician work are deductible, whereas expenses related to the chef work are not. From the following list of expenses, determine if the client is allowed to claim the expenses on their tax return or not. Business cards that promote the beautician business, hair color, a butcher knife, smocks, and a chef uniform. The business cards, hair color, and smocks are allowed expenses for the beautician work. The butcher knife and chef uniform are expenses related to the client's W-2 employment, so cannot be deducted. Interview training. Before or during an intake interview for a self-employed client, give the client a business expense worksheet so that the worksheet can be included with the client's other tax documents. Instruct the client to complete the expense form for each job that was self-employed. Similar jobs can be grouped together, such as if a client works for 2 rideshare companies or is a painter for 2 different companies. The income and expenses of similar jobs can be entered on the same expense worksheet, but only work expenses can be entered on the worksheet and never living expenses, such as diapers for a dependent or any utility bills. The income and expense worksheet does take a bit of time to complete, so many clients will continue to work on their expenses once the intake interview has been completed. Your job during the intake interview is to help the client begin the process of documenting the business expenses, so feel free to move on to another intake interview while the client completes the worksheet. Don't forget to loop back to the client. We want to move the client to the tax preparation stage as soon as they are finished filling out the worksheet. Let's take a moment to talk about mileage. There are 2 methods that the IRS allows taxpayers to account for miles driven in the year. The first method is the actual expense method, which is to note specific expense amounts for what it costs to operate the car for business use that year. This method includes amounts spent on gas, car maintenance, repairs, tires, insurance, registration fees, licenses, and depreciation or lease payments, attributable to the total miles driven that are business miles. Foundation communities will not prepare a tax return using this method. Taxpayers have the option to use a paid tax preparer if they prefer to use the actual expense method on their tax return. The second method is the standard mileage rate, in which you notate the total number of miles driven for business use. The IRS each year identifies a reimbursement rate that, when multiplied by the total miles driven, provides a final dollar amount to use as a deduction on your Schedule C. In our VITA program, we are only allowed to use the standard mileage rate. Parking fees and tolls related to business use of the vehicle can be claimed as an expense on the return, regardless of the mileage reimbursement method used. To calculate the total miles, we first ask the taxpayer if they drove to the same location every day, or did they have multiple locations in the day. For clients, the first trip and the last trip are considered commuting miles, like those with a W-2 job, and are not deductible. We only count miles driven between the first business location and the last site before the taxpayer returns home. An exception to this is for taxpayers who have a home office, but those taxpayers are out of scope for the VITA program. Here are some self-employment topics that make a tax return out of scope for VITA. If the taxpayer has business expenses greater than $35,000, if the taxpayer pays employees or workers, if the taxpayer is claiming a home office deduction, if after calculating total income and total expenses, the taxpayer has a business loss, if the taxpayer had more than 3 separate businesses during the year. If you notice that any of the items mentioned applies to a taxpayer, such as the taxpayer mentioning they have employees, please refer the client to the Special Tax Services Program. This is a special group of volunteers within Foundation communities that can prepare certain tax returns considered to be out of scope for the VITA program. To see the complete list of topics that the Special Tax Services team can prepare, take a look at the back page of the handout titled "Your Return is Out of Scope," which is available on the Volunteer Resource page and printed at the site. Clients must be referred to the Special Tax Services Program via a ticket transfer. If your client is out of scope for VITA and the item that makes the tax return out of scope appears on this handout, please inform an intake lead to help refer the client to the Special Tax Services Program. After completing the ticket transfer, the Special Tax Services team will work with the client to complete their out-of-scope tax return. Things to remember. An individual can have a W-2 wage income and self-employment income. Taxpayers need to report all earned income on their tax return. This includes every part-time job, jobs that only lasted a couple of days, and income that was earned in cash. Some people receive a 1099 MISC or 1099 NEC instead of a W-2 as self-employment income, but many do not. If a taxpayer did not receive a 1099 MISC or a 1099 NEC, they can report the total of cash or check payments that they received in the tax year. A client must complete a tax return to include all self-employment income in any dollar amount, even if the amount is below the IRS filing requirement.